Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, a old regular of ours, Gregory Mannarino. Gregory Mannarino, of course, you're with TradersChoice.net. You're the former Bear Stearns floor trader. Gregory Mannarino, thank you for joining us today on USAWatchdog.com.
Thanks for having me, Greg. It's always a pleasure. Thank you again.
You know, somebody came on the YouTube channel and called us the Greg and Greg Show, Greg Squared. And, you know, it's pretty good because you and I do talk all the time, and not just on, on the YouTube when I have you on as a guest, but you always know what's going on in the markets. You're very attuned to what's going on. And I want to get back to this taper. And you've been talking about it, how they're not going to taper. I guess at some point they are going to taper. Tell me why they might taper in your mind, because they keep talking about this taper.
Okay. I personally do not believe we are going to see a taper this week. But I did talk about how the Federal Reserve would taper if, in fact, that was the title of one of my videos. Greg, what I think people don't understand here, and this is really the truth, and I urge everyone to do a little research on their own about these things. The Federal Reserve, and we'll focus on the Federal Reserve right now, they are literally a mechanism which, on purpose, creates distortions in the market. They've allowed vast misallocations of funds, and as such have created bubbles all over the place. In fact, they've created inverse bubbles with regard to certain other assets. I'm referring to the metals here. You know, let me go over some basic concepts here before I go on here. What people don't realize, when we're in a situation like we have now, a Federal Reserve that is really only existing for one reason, and that is to foster a wealth transfer. It's really that simple here. And 99.9% of people don't get this. So let me outline this just real quick. So through the Federal Reserve, through their mechanism of suppressing interest rates, has forced individuals into risky assets. In other words, into stocks.
Just as a side note, Ben Bernanke has stated this in the past, that he did not want people saving money in the banks. He wanted people in the stock market. More than one person at the Fed has said this. So this isn't some crazy idea that you have. The Fed has said this. Go ahead.
Yeah, absolutely. Because you can't be in the dollar. Anyone who has a savings account, Greg, you know this, and I'm certain that most of your viewers here know this. If you have a savings account now, or an interest earning account, you're getting paid interest less than the actual rate of inflation. So basically what this mechanism is allowing is this. You know, people cannot be in things that they used to invest in, like an interest earning account, because if they do, they're literally being robbed, because again, they're being paid interest less than the actual rate of inflation. But this suppression of interest rates has allowed incredible amounts of speculation here in the equity markets, and we've seen they've gone up and up and up and up and up. The Federal Reserve has reinflated the equity bubble that burst, crash of 2008. That bubble was inflated on purpose. This bubble is being inflated on purpose as well. So the Federal Reserve will taper if they want to burst that bubble. And what I'm trying to get at is this. The Federal Reserve, in collusion with the Wall Street banks and our policymakers, because they're all in on this, have allowed the misallocation of funds and bubbles to be built up. And an enormous amount of wealth has been created for a fractional few through this mechanism. Who has this really helped, Greg? Has it helped the average guy, the average girl who doesn't even own stock? Absolutely not. It's just stolen cash from them through this mechanism of suppressed interest rates. Okay, so what the Federal Reserve is going to do at one point, and I don't think it's going to be this week, honestly, is scale back this taper in an effort, a direct effort to burst these bubbles and allow the Wall Street banks, the institutional investors, to short it all. That's what they're going to do. That's what I'm going to do, and I'm from everyone.
You're saying that we had Nomi Prinz on who's the former Goldman Sachs, managing director, banker, and she's also an author, wrote, Takes a Pillage and many other books, a smart woman. And she said, bank stocks are up tenfold since the meltdown of 2008. He says they're not working on unemployment. I mean, that's just labor participation rates coming down. But the bank stocks are seriously up 10 times beyond what the S&P. They're outperforming them tenfold. So I guess what you're saying is that, well, they're going to, give up some of the stock price if they taper. And you're saying that the wink, wink, nod, nod, the Fed will give a heads up to the six big banks. They'll short the daylights out of the market, and they'll just harvest money.
Just like they did last time, Greg, and I've talked about this in my blog many, many times. All this has been is a backdoor bailout here for the big banks, or not even a bailout. It's more like a wealth creation machine from hell. That's all this has done, has allowed these institutional investors to gain enormous amounts of wealth on the upside of this trade. Because that's all this is. And then when they burst the bubble, all these institutional investors are going to collect all that same cash on the downside of the trade. It's just an incredible mechanism. It's done over and over and over again throughout history, and it's being done on purpose right now. This is why I'm trying to tell people, you got to understand the mechanism of what is going on here. And it's monstrous, and it's literally a wealth theft from some and letting it be redistributed to others. That's this whole thing in a nutshell. It breaks down to that.
Theft from some and transfer the wealth to others.
Well, theft from most, let's just put it that way, and just, allowing the 1 or 2%ers, the Wall Street banks, to get more wealthy. This whole thing, this Obama administration, and I beat them up a lot, is really is such a position to, keep people believing that Obama wants people to believe he's on their side. He's on the side of the middle class. He's done nothing but destroy the middle class. He's creating that two-tier society that you and I have talked about all the time. That's what we're going back to here, Greg. The middle class has the bulk of the wealth here. The lower class people, unfortunately, they don't have anything. So the middle class has whatever wealth that the upper tier wants. So when the middle class is gone, we're going to have that two-tier society. That's where we're marching here. And people are like little zombies or drones just marching along, in formation, just like they're making them do through the mechanism of the mainstream media. And it's being done on purpose, Greg. It's being done on purpose.
Do you think we're going to have bail-ins? I mean, do you think Gerald Celente, Lindsey Williams, they're all predicting some sort of bank calamity, some sort of currency reset in the first quarter of 2014. I don't think anything will happen this year, 2013. As a matter of fact, I was interviewed on another radio program, and I was kind of doom and glooming it, but actually I was facting it. And they said, well, do you have any good news? I said, yeah, we're going to have a nice Christmas. So what do you think about those predictions of a currency reset, a bank holiday, a some sort of calamity in the first quarter of 2014?
Okay. Let me start here. And this is something, if any of you out there are paying attention, you need to pay attention to this, what I'm about to tell you. 99.99999% of the people just don't understand one simple concept, and that is the monetary system that we have. If you can understand how it functions, and I'm going to outline this right here, it's that simple, but it's so huge. And once you get this in your head, you're going to go, oh my goodness, here it is. Now, we do not have a monetary system that is built to create wealth for people. We have a monetary system that demands that cash be borrowed into existence in perpetuity. It cannot stop. So what does that actually mean? Okay, a lot of people, to put this in another perspective, this is what it is. Why can't we have a balanced budget? We just understand the budget just came out. No spending cuts. We're going to add another couple of trillion to our debt here.
Well, that's coming.
Yeah. Why do we give cash away to this country or this cause? Why do we give cash away to this country or this cause? Because it's the system. It has to have cash borrowed into existence in perpetuity. If we stop, if we get a balanced budget or anything, this system will collapse. We cannot put restraints on spending. This is what our policymakers won't tell anyone, but these are the facts. It has to be this way. It's a debt-based economic model, period. We know about these periods, don't we? Anyway, so with that in mind, we are marching towards, again, a absolute collapse of the system. It's a Ponzi scheme, and every single Ponzi scheme ends in collapse. The Federal Reserve, the world central banks, let's stick to the Fed, they print this cash out of thin air. They disperse this cash. The moment it leaves their computer screen or their printing press, it begins to acquire interest. Interest that they print out of thin air, not earned through the production of goods and services, no, through this mechanism of magical currency production. It will end just like every other single Ponzi scheme. And other nations of the world, especially China right now, are well aware that we are near, very near the end game. So absolutely we're going to have a currency reset. The dollar is losing its reserve status every day. Please, people, look into this on your own if you don't believe me.
What are the chances? What are the chances in the first quarter?
First quarter, I can't narrow it down to such I don't think so, honestly. It's happening. It's going to happen. We're watching this unfold. It's a slow motion train wreck, right? But what people just need to do is understand this one concept. And, people like me come across as a doomer. Well, I'm not a doomer. This is about opportunity. That's all this is. It's about opportunity upside down, backwards, and sideways. If we know the playbook or pretty much what's going to happen, we can capitalize on that. That's all this is understanding where you need to be and where you do not need to be.
Where do you need to be? I mean, some people are saying, Bitcoin's now the thing you should have, or crypto coins, and gold and silver, forget that. They're all dead. Where do you come down on that?
Okay. First of all, let me just talk about Bitcoin real quick. I've covered this a little bit here and there. Since its inception, I have not wanted to get involved in this. I think the concept is interesting. However, it will not go without some type of regulation. They're not going to allow this thing to grow. The world central banks have gone through enormous lengths. I mean, we've fought wars over the petrodollar system to establish the U.S. dollar as the world reserve currency. So they're not going to allow this to play out. They will crush this at one point here. I have no doubt at all. So I don't even want to be involved in this in any way, shape, or form. I think it's a dead end. At one point, it won't even exist anymore. With regard to the other assets, gold and silver, okay, this goes back to the bubbles and the misallocation of funds that have been created by the Federal Reserve. There is an inverse bubble with regard to gold and silver right now, and it all comes down to this. We are now on an environment that demands people take on risk. In other words, be in equities. So all that cash right now is in equities. But again, think of the scenario. It is very, very simple. And I hope, again, people pay attention to this. Right now, we have bubbles in debt. The biggest of them all is this debt bubble. It's the most dangerous threat to humankind. I've talked about this. I've written about it. It's epic. We also have this bubble in equities. At one point, these bubbles will burst, Greg. They will burst because every single financial and economic bubble in history has burst. Why? Because they rise above a level that can be sustained. And here's the key: by any means. Federal Reserve is trying to sustain these bubbles by printing cash, buying mortgage-backed securities, buying bonds. They're doing whatever they can to keep these bubbles up until they're ready to burst these bubbles. When they do burst these bubbles, and I believe it's going to be the Federal Reserve that's going to nudge this, all of this cash that's leaving the debt market, that's leaving the equity market, is going to look for a place to go, Greg. Where do you think it's going to go? It's going to go into suppressed assets. Period. The freaking end. That's where it's going to go. It's very, very simple. And that's why you need to be in hard assets, in suppressed assets. There's no other way to put this. You can have all these people out there that have no idea of how money works or how money flows or how it leaves certain assets and goes into others. And they're going to come up with 10 billion excuses why you shouldn't be in gold or you shouldn't be in silver. But let me just say this. Anyone that thinks like that is a sheep, and they're going to get crushed. without any doubt. As a trader, okay, you need to be able to look at an asset and try to gauge if it's undervalued or overvalued. And one good way to do this, the most simple way, is this. If people are super bearish about something, you want to look for a reason to be bullish about it. If people are super bullish about something, you want to look for a reason to be bearish about it. This is how wealth is created. It's not really created by following the crowd. That's another secret. But this is the truth. This is how it's all going to work. We're going to have these bubbles in the debt burst, bubble in equities burst. It's going to look for suppressed assets. And nowhere else are you going to find more suppressed ones, which are being done on purpose, than the precious metals, more specifically silver, in my opinion.
Let's talk about Iran and the sanctions and how it looks like they have a deal where they're going to, lift the sanctions. They're going to have $7 billion kind of come off. Some people in the Senate don't want to see that happen. Iran, of course, always says that their nuclear programs for the peaceful production of energy, even though, they've had multiple, Security Council resolutions saying, hey, listen, you shouldn't be enriching any uranium, but Shazam, the deal they have allows them to enriched uranium at a low level, 3.5%. What's going on there? Why did all of a sudden the U.S. say, yeah, okay, it's okay, go ahead and enrich uranium after all this time of saying that they can't enrich uranium? What happened?
Well, President Obama told them if they want their nuclear program, they can keep it, period. That's a fact, and that is what's going on here. But there's a lot more going on behind the scenes here. The reason why the Obama administration needed this deal is because they did not want to sanction China for buying oil. That's it from them, from Iran. That's what this is all about. They won't tell you this. No one will tell you this. I think it's starting to catch on a little bit, but that's the only reason for this deal. And there's a lot more going on here, Greg. Look at what China is doing to us here. They're making us a laughing stock. Recently, they intercepted. From what I understand, it wasn't just one ship; it was two of our warships were intercepted by Chinese warships. They've also increased their airspace. We understand that too. They've come out publicly stating they want a new world reserve currency. China is coming of age. Our policymakers are doing everything wrong, and they're sitting back and just watching it all unfold, and they're laughing at us. They're literally laughing at us.
Could China, if we come in on the side of Japan, for example, we have treaties that say we're supposed to protect Japan. Mm-hmm. We've basically, in the treaties, they wouldn't allow them to have, certain military assets and things like that in their, also in their constitution. And if China gets into this, a military conflict over the Senkaku Islands, wouldn't China punish the U.S. by selling, their U.S. bonds? I mean, they are the largest foreign holder of our debt. Number two is Japan. Either way, I think somebody's going to be upset with what we decide on.
All right. Let's talk about this. You get a lot of people out there who are beating up gold. Okay, we know that. What is China doing? China's been acquiring this stuff in mass. They're hiding a lot of what they're actually buying as well. So what are they doing? They're betting against their dollar. They're taking the short end of the trade.
Which is gold.
Exactly. You bet against fiat currency or the U.S. dollar by holding gold. Gold is moving east. It's moving east. It's moving east. We all know this. Everyone knows this. But it's not being talked about. And again, if all those people out there, and there's a lot of them who are, anti-gold, anti-silver, anti-hard asset, well, what do they know that the Chinese, obviously don't know? They must think they're smarter than that entire country or everyone else that's acquiring this stuff that's betting against the dollar. Greg, I did a video recently where I discussed how the dollar has been in a long-term downtrend. If you were to look at a chart of just ticker UUP, which is a dollar bullish ETF, over the last 5 years, you will see is in a steady, nice down slope here. At the same time, the stock market has gone up. The dollar is continually being punished. And it won't stop. Again, this goes back to the mechanism we spoke about earlier, how we have a debt-based economic model that demands this cash be borrowed into existence in perpetuity. It cannot stop. The U.S. dollar is at the end. It had a great run, but it's over for the U.S. dollar, in my opinion. There will be an alternative to this, whether it's a basket of currencies or who knows. But the dollar, unfortunately, is done. Countries are betting against the dollar. The richest people in this country are betting against the dollar by holding gold. And again, I think.
So you're not worried about the price in the 1200s. You're not worried about that. You'd be buying more.
Oh, without a doubt. I've come out publicly saying that. I'm going to tell you something else. I think it's very possible we could see these metals fall under further pressure here. This deal that we reached with that Obama reached with Iran, when that happened, I came out and I did a video. I told everyone, I said, this is going to pressure the metals. And what they have done is gone down, 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 down. What this has done is, again, create opportunity. I have increased my purchases of these assets, and I believe we could see another smackdown here at one point. I think it's possible that we could see gold hit 1100 or maybe even lower than that. And silver might hit 1850. It's hard to say. But I just say just embrace these things. Again, this is opportunity. This is all this is. Again, these are in inverse bubbles at this particular point. And just like I said earlier, when we have this debt bubble burst and we have the equity bubble burst, this cash isn't going to go to money heaven, Greg. It's going to go into suppressed assets, gold and silver, other assets as well. But the reason why I say these two more specifically is I think they are the most suppressed assets of them all, and silver takes the cake when it comes to those two metals.
So, Gregory Mannarino, we have a bubble basically in interest rates. We have a bubble in debt. We have a bubble in the stock market. We have an inverse bubble in gold and silver and things like that, tangible assets. Are all these things just completely separate, or are they linked together somehow?
It's a great question, and it's a very simple. They're all linked to one thing, and that is this bubble in debt, the bubble in the misallocation of funds. Let me rephrase that. It really is all about the misallocation of funds. So it's all linked to that. That's the root cause, is the misallocation of funds. So the problem here is this, and it's very simple. When one of these bubbles decides to burst or starts cracking, they're all going to do it. Simultaneous. Boom, 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 boom. And there's the reset that everyone's been talking about, that I've been talking about, that you've been talking about. And this is why it's going to be a time that we're never going to forget here. It'll be written in the history books. And people are going to say, how did they not see that coming? How did they not see that coming? Well, you know what? A lot of people did see it coming. And you and me and a lot of other guys are out here trying to talk about it. And people don't want to hear it. They can't understand it. They don't even understand, again, the basic premise of how money works, how it has to be borrowed into existence, and it can't stop. This is why we haven't had a budget. This is why we can't have a balanced budget. This is why they can't stop spending. It's all about keeping these bubbles inflated, Greg, and they're all going to burst at the same time, or very close to the same time. So what people need to understand is there's not going to be time to take cover from this. This is where they need to be ready now. Because when it happens, rapid succession, boom, 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 absolute, complete pandemonium as far as I'm concerned when this happened. And bail-ins, like you were talking about earlier, absolutely. People are going to not be able to get their funds. There is going to be bank holidays, bank closures. You name it, it's going to happen. People will not have access to their paper, and they're going to wish that they did not believe in this paper scheme, Greg.
Gregory Mannarino, TradersChoice.net. Thank you very much for joining us today on USA Watchdog. Gregory Mannarino, again, TradersChoice.net, a free site for trading tips that you give away to people for small donations if they'd like to give one. TradersChoice.net. Gregory Mannarino, thank you very much for joining us today.
Thank you, Greg.